It was a fantastic day in the market for energy investors. But is this a dead cat bounce? It looks like we've broken every single technical level and we are still very much on a downward trend. This is just a one-day move. How do we know if this is convincing or not? I believe there's several fundamentals that point to the fact that the energy market is going to remain bullish and that the selling is overdone and has been overdone. One of which is the fact that the 7-day sell-off we've seen in the price of oil is the longest seen since 2019. And in 2019, we didn't have a coronavirus. We had a coronavirus downturn in 2020, yet this lasted longer, this Delta variant, where we had no US lockdowns. We just had a whole lot of fear. And if you've been watching these videos, you know there's a component of this market, this oil trading market, that I don't like. And it's the notion of paper traders in a commodities market. I think they should speculate some other way, not necessarily in the oil market, buying contracts and affecting the economy, not just for traders and people like us, but for the real economy, consumers out there. I guess, maybe they benefited last week, but now all of a sudden, it's possible that we do see some whiplash the other way. So what gives me fundamental conviction that the oil market's going to remain on course here? If you watched the videos previously, I believe it was the week before last week, we talked about how the White House asked OPEC to pick up its oil production. This is unprecedented. OPEC is a cartel. The United States is a very large oil producer, at least has been historically. So you would expect if the U.S. needs oil, it's going to pick up its oil production. But that's not the case right now. The White House and the Department of Energy wanted to go to OPEC. OPEC said no. Today, when oil's up 5%, which is, obviously not a natural move, has a lot to do with no more paper sellers left and panic buying of some sort, the United States decides it's going to liquidate some of its emergency holdings of barrels of energy. And the ironic thing here is the United States picked up a lot of these last year around when energy was negative $37 a barrel. So it's just ironic. That was caused by paper traders. We're seeing a whole lot of paper traders playing around with things right now. I'm remaining bullish energy. Stocks, primarily energy stocks, are still well below where energy was just a few months ago. Energy stocks were just a few months ago, even, when energy was at this level. So there's a lot to catch up with that. And they were below this level before that period. So you go back to 2018, 2017, 2019, if and when, I don't think energy was higher than it is now in 2019, but it was previously, these stocks were more expensive. So there's reason to believe they should be higher. The fundamental, killer of these stocks, that they're not poised for a renewable future, is not the case if you're buying the right ones, particularly Schlumberger and ExxonMobil. In my opinion, people will say Chevron as well. So, they're well priced. They are well priced. And just from a, trend perspective, these stocks didn't have a correction, didn't have a pullback since October of last year. So to see one strong pullback, we can't be shocked. We can't be totally shocked. That's just is what it is. Obviously it would have been great to market time this situation, but June 4th, when a lot of these stocks peaked, I was convinced they were going to continue going higher. The price of oil kept going higher, but Delta fears began, and that's a hard thing to predict. Now, Delta is rolling over. The stocks are lower than they were given previous prices of oil. Demand is going up. They're poised for a renewable future, and they're very well priced. So I expect to hit new 52-week highs on these stocks before the end of the year. We'll see what happens. I'm sticking with it. Haven't sold a single energy stock. I've only added. And ready to hopefully reap rewards. We'll see what happens. So until next time, peace out.